Hello, everyone, and welcome to another FinQuery webinar, the secrets to pain-free ASC 842 and IFRS 16 audits for public companies. Before we get started, let's make sure to review a few administrative items so that you can get the most out of today's webinar. First, please review the tool menu at the bottom of your screen. You can click on any of the icons there to be taken to that screen or display the corresponding functionality. You'll see the Q&A icon, and that can be used to submit questions throughout the presentation. We will try to answer all of your questions live, but if we run out of time, we'll make sure to email you the answer. You'll also see the paperclip icon. There you can find content related to this webinar to download or review, including some guides and free tools. You'll also see there is a react button to react to anything that I'm saying throughout the presentation. And lastly, and probably most importantly for a lot of you, is the CPE certificate icon. If you are watching this event live and want CPE credit, this program is eligible for 1 CPE credit hour. To receive CPE credit, you must attend the webinar for a minimum of 50 minutes and answer at least 3 of the 4 polling questions that we'll be asking throughout. Please wait until the end of the webinar to click on this icon. We will announce when it's the right time to download your certificate at the end of the presentation. If you meet these CPE requirements, click on that at the end of the webinar. You'll see a green check mark allowing you to download that as a PDF. You'll also receive an email later with a link to print your certificate. For the polling questions, make sure that you actually submit. So you'll probably have to scroll down to hit submit to ensure that your answer is recorded correctly. For any questions that you have about today's webinar, please contact us at cpeinfo@finquery.com. With that, I'll formally introduce myself. My name is Rachel Reed. I'm one of the technical accountants here at FinQuery. I studied accounting at the University of Mississippi. I started out my career as an auditor at EY, but now I work at FinQuery in technical accounting, specifically with an emphasis on lease accounting. A short background for those of you who are not familiar with us as FinQuery. We were established back in 2011, initially set out to streamline lease accounting processes. But over the years, we have evolved into a trusted partner for over 8,000 organizations, including roughly 600 publicly traded companies spanning across various industries. And now our journey has expanded beyond lease accounting. Today, we're dedicated to empowering our clients to make informed and strategic financial decisions across their most significant spending areas, which are leases, which we'll be talking about today, other financial contracts, and software. All right. And so everyone on this call today, kind of getting us into this, probably wants their company's audit to go well. But as you're all very aware, you accountants at public companies often face increased pressures of tight timelines and significant consequences for your audits. So we've actually created a new audit guide, which we have linked here, and we'll be talking through some of these things today to help you maintain open communication with your auditors, to make your audit process as efficient and ultimately as pain-free as possible. So this is what our agenda looks like. We'll be talking through how you can prepare and have a proactive mindset for planning for your audit. Talk through things like ensuring completeness, documenting your policies and controls, maintaining communication with other departments, and how you can use efficient systems to approach your audit with confidence and making your plan and sticking to it. And this process will, again, lead to a cost-efficient audit. So we'll be talking through these different steps today in our agenda. But before we do so, we're going to go ahead and kick off our very first polling question. And that question is relevant today. How did lease accounting impact your most recent audit process? And you can select all that apply here. Did it add complexity, add time, add cost, or was there no impact? So again, as a reminder, if you would like to be eligible for CPE credit today, make sure you answer at least 3 of these 4 polling questions and stay on for at least 15 minutes. We'll go ahead and leave this up. And here are the results. So thank you everyone for answering our first polling question of the day. We're going to go ahead and get into the presentation now. All right, so the first thing we want to talk through in our agenda is the initial planning. And so what this step is evaluating your internal controls and your current processes to make sure that they are good enough to address the ongoing risk associated with compliance with ASC 842. So one of the very first things I always like to mention here is don't wait until your audit to start talking to your auditors. Start talking to them before your audit and throughout the year, because any surprises, it's better to address those on the front end rather than on the back end. So fewer surprises you have down the road, the fewer questions that the auditors are ultimately going to have, and you'll have better peace of mind knowing that they've given sign off throughout the year on different judgment calls or interpretations that you've made. And so how can you go ahead and start that? Well, first, you want to make sure that you've assessed your risks and controls and gone over this with them. You should by now, given that you guys are public companies, have some processes in place. We'll be talking through some of these today, but making sure that you have a team in place and that you have different policies and procedures in place that will help minimize the risk of leases being missed, or not only being missed, but being incorrectly calculated and ultimately going into your disclosures incorrectly. And so while we're going to be talking through some of this, each company out there should consider your own unique inherent risks and make sure that you're specifically designing and implementing internal controls for those risks and place those in place to respond to new risks. And so some of the questions you want to ask are, for completeness, have all new leases that you've entered into, as well as lease changes, been captured? Is the data that you abstracted from the contracts accurate? And was that entered correctly into your spreadsheets or into your lease accounting software, and ultimately producing the correct calculations, and then going through your disclosure checklist, making sure you're including everything correctly within your disclosures? And so for processes and procedures, you want to review who's going to be doing and managing leases on an ongoing basis. So some of this may have changed since you initially implemented ASC 842. As you've been doing this for a few years, have you gotten new staff? Have processes changed as maybe you've gotten better at it? Maybe at the onset you were doing certain things monthly for reconciliation, but now you feel comfortable doing them quarterly. Just make sure that you review the team and the departments who are involved and who's responsible to collaborate with maintaining your lease portfolio. What is their responsibility? What happens when you get a new lease? Additionally, you want to make sure that if there is any new staff, that they are properly trained not only on the processes, but also on the actual accounting standards themselves. They understand why it's important. And if they are responsible for doing calculations, something like that, you want to make sure that they understand, so that if they're doing something wrong, you don't find out until later on. And who's overseeing the process, who's reviewing the data, who's reviewing the leases, and again, document those things. Document all of these things, the responsibilities, who owns what, as well as the processes that you may have in place, or any sort of improvements or changes to the processes, depending on where you are as an organization. And so these are the different responsibilities that you should have sort of at a minimum, right? Again, some companies may have hired new staff initially to close the gap. Maybe others, smaller organizations, are relying on just general internal accounting staff to handle leases. And so if you haven't already, review your organizational chart to see who's going to be managing things and train those relevant stakeholders. You also would probably want to establish some sort of a handbook as sort of the methodology for how to manage leases, and so that you can reference it if you do have new employee, and establishing different subject matter experts throughout who manage these different activities and can serve as like a point of contact for things like accounting explanations or data abstraction, system usage. And so these are the different items or processes that would require someone to be responsible for them. So really, who signs a lease, right? Who's the first person to be involved in this process? So when you think about contracts and leases, one of the very first things that happens is someone has to decide whether or not something is a lease and if it's in scope for ASC 842. And you may have multiple people responsible for that across various departments. So what happens at that point? Once the lease is signed, where does it go? Who decides whether it's a lease? And then at the point you realize it is a lease, who is responsible for abstracting the data from the contract? Who is the preparer? Who is the reviewer? And then who enters that information into your lease accounting software, if you're using one, or into maybe a master spreadsheet you have. And then who reviews that and ensures that not only is it a lease, but that you have the appropriate lease classification so that for your accounting outputs, you have the correct amortization schedule. And then who is responsible for keeping track of ongoing changes? So things like renewals, modifications, or other changes. And also from that, who takes that information and puts it into your financials. What do you have going on for the disclosure checklist? Who's preparing those and reviewing those? And who tests this information? Who is going through and recalculating and reperforming and reviewing and reconciling all of these different critical disclosure items? And again, there could be multiple people depending on how big your organization is. And so you should be documenting this if you have not already thoroughly for your audit. Not only for new leases, but also for lease changes. You may have different processes as well for different types of leases. That's something to consider as well. So maybe real estate leases go through an entirely different review process than vehicles or equipment leases. And so these things are important to talk about, think about, establish a workflow for, so that you can, again, mitigate the risk of not having all of your lease data appropriately disclosed. And so all of this, again, is going to help you minimize your risk, account for your leases properly. And so just do this in advance of your audit so that it can go as smoothly as possible. Moving into internal controls here, we all know that internal controls are critical for all companies, but that publicly held corporations are under more scrutiny for this through Section 404 of SOX, or Sarbanes-Oxley, which requires managers of you guys use companies to assess your internal controls, and so that the auditors can report on that. And so there may be an opportunity for you to refine your controls, your controls matrix and memos that you have for SOX 404. And your auditors are going to continue to look for following documentation every year on these internal controls, again, on who's what segregation of duties you have for the initial assumption that it's a lease, changes and how that's validated, your protocols for who can actually make changes as well in your system. So if you're using a software, who has access to enter data, who has access to approve data, who has in your Excel spreadsheet, maybe you're using Excel, who has that same ability. Do you have a physical trail so you can see who did what and when it was changed or when it was added in? So again, you should issue a series of control procedures to verify all of the accuracy you have for your lease accounting. So both preventative through segregation of duties, data validation and access controls, as well as detective through account balance reconciliation and financial statement review. So preventative, again, going to be things like segregation of duties and approval, but then being able to catch errors through the process when something may have happened where they're made. So reconciling your right of use asset and lease liability balances each month, or again, quarterly if you feel comfortable, so that you're not catching those things at the end of the year, will help you prepare for your audit better. Additionally, you may want, the lease team may want to select a series of new leases, perform selected tests to assess the accuracy of the critical data elements. And auditors, of course, as we all know, are going to want the ability to access all of that and see what controls are in place and ensure they're being consistently followed. And so I was going to say it at some point. This is where software, of course, would help save time and money when it comes to your audit, because if you are doing a lot of this manually in Excel, it's very difficult to have controls within Excel spreadsheets, since there's no like access levels in there, but whereas software does. And so again, there may be an opportunity to refine some of your controls and just review what you may have in place and ensure that it's still appropriate. And so ongoing lease review as well. So we were talking about controls review, but what we're talking about here is the importance of ongoing review of your lease portfolio at mid-year, which will ultimately, again, minimize surprises and adjustments at your end. So you want to make sure that you were reviewing your existing lease portfolio, not at the end of the year, but throughout the year to, again, catch any sort of errors, have better visibility to expenses, and minimize the surprises that you may have within your audit. So make sure that you can have open lines of communication with all of the departments that not only lease assets, but also that are involved with that lease process as much as possible, so that you can have your ongoing review and not be doing all of this at the end of the year. So moving into some more documentation, you're going to see we talk about documentation quite a lot today. One of the things you also want to make sure that you are reviewing prior to your audit is the existing policies that you might have in place. So one of these is your materiality or capitalization thresholds. Most public companies and non-public companies establish some sort of a policy under which leases did not get capitalized, similar to like a fixed asset capitalization threshold. So review that and make sure that it is still applicable and that it's being consistently applied, because maybe it's changed. Now, if you do report under IFRS, keep in mind that there was a given threshold of $5,000. So if it's fair value of under 5, a loan or in the aggregate, that's still applicable. But just ensure that you haven't missed that if you're IFRS, or if you're a public company, that since there was no exemption and you created your own, you need to make sure that that's documented and being applied. And if anything was updated, include it in your policy memo and discuss it with your auditors as soon as possible. Discount rates we'll talk about in the next slide, but discount rates and other lease assumptions. Additionally, the CAP versus OP test, or the finance versus operating lease test classification criteria. You want to make sure that that is being documented. While there was the removal of the bright lines, 75 and 90%, we found a lot of organizations are still using that. But if you were not using that, make sure that you're consistently applying your thresholds for your lease classification between operating and finance. And again, this is a little bit more important for GAAP companies, because there is still a significant distinction for tenant leases between operating and finance, whereas under IFRS, they all do become finance, but just make sure to review that nonetheless. And then reasonable certainty criteria. So this is something that requires some judgment, but when we think about things like renewal options or other options, there's a requirement to determine your reasonable certainty, or whether or not you think you're going to exercise the option. So make sure that you review and document what different criteria you may be using to determine whether or not you are going to exercise an option, and whether or not they may have been updated based on your organization's business policies and practices or status, or based on the current economic conditions. So getting into the discount rates, as I promised I would, we have talked about this in countless other webinars, but at this point, everyone should have a policy in place for your discount rates. Obviously for transition you did, but also ongoing. And make sure to review that policy. As you all are public companies, you cannot use that risk-free rate application that non-public companies can. This does require a higher level of effort than simply pulling a rate down from the Treasury website, as you are all familiar with. You need to use the implicit rate or the incremental borrowing rate. And so like everything else, discount rates and policies should be reviewed periodically to make sure that they're still applicable to your business and reflective of your position economically. Have you had any material business events? Things like mergers, acquisitions, change in credit rating, among any other factors, right, can affect your discount rates. So are they still appropriate for your current business environment? So the means in which you originally determine your discount rates, you also want to replicate that, confirm that, and provide support for the change if there was one, or the confirmation of there not being a change. So every time that your discount rates are revisited, document the logic behind your decision to either update them or keep them the same, and be prepared to explain that to your auditors. Again, if you are using a software, there are ways to apply discount rates correctly automatically. While there are multiple methods, lease by lease or based on a portfolio approach, you want to ensure, regardless of whether you're using a software or not, that your application was correct and consistent for new leases. Because as we all know, this significantly impacts your lease liability. And so the auditors will continue to scrutinize that discount rate for ongoing changes to your portfolio, new leases, modifications in which you have to recalc or calculate your lease liability. So again, cannot stress enough how important it is to be prepared to explain and document this to your auditors, since this is potentially a judgment call and something that you don't want to be caught off guard at the end of the year, because then you have to go back and recalculate everything using the correct rates. All right, so what are some of the things that the auditors might be requesting? So these are the three different things we talked about: policies, team responsibilities, and controls and processes. Starting with the one we just discussed. Again, policies, they're going to want to know the logic that you use to determine your discount rates, as well as any assumptions that were used or models that you use to generate those rates. And again, document those, make sure they're consistent. They're going to want to know that. Additionally, other judgments. We didn't talk about this one as much, but if you have any policy for short-term lease exclusion, while there's one given in the standard itself, if there were any leases that you deemed short-term, you would want to document that policy, make sure it's still accurate, as well as the materiality and the reasonable certainty criteria, right? Document what you're using to come to that conclusion as to whether or not you think you're going to exercise an option or not. Team responsibilities, the training, if you do have some sort of training or certification exam, then you want to make sure that you have that and you can show them that they've been certified, and that you have a strong understanding of the requirements for maintaining compliance with ASC 842 or IFRS 16. And then for controls, again, just documenting your current controls. And if you are implementing a third-party software, you should plan to request and evaluate SOC 1 or SOC 2 reports to assess whether user controls were designed and implemented appropriately. Again, if you're using a spreadsheet, any controls over the system or spreadsheet should be implemented and tested. So they're going to want to see all of that. All right. Now that we are moving into the next portion of our presentation, we're going to ask our second polling question. How are you currently handling lease accounting compliance? Are you doing it in Excel or spreadsheets? Are you using a lease accounting software? Do you have something internally developed? Maybe a module in your ERP or lease management software or other? So again, reminder to everyone, if you'd like to be eligible for 1 CPE credit hour, make sure you're answering at least 3 of the 4 polling questions. This is our second polling question. Make sure you hit submit, and we'll go ahead and leave this up for just a few seconds. Thank you everyone for answering that second polling question. Let's take a look at the results. All right. So in addition to your internal controls, policies, procedures, and other documentation, your auditors are also going to be checking for completeness. So whether you've disclosed your lease obligations, and as you know, you should probably have developed a process to identify new leases. But in the event that you haven't, or you see room for improvement, we're going to be talking through how you can validate the completeness of your lease inventory. So first things first, you want to start with your existing lease from last year. Make sure that those are still active. Review your year-end lease lists and disclosures. And it's a good idea to have a list of all of leases that you have, whether they were in or out of scope. Maybe because they were out of scope due to materiality or short term. Again, make sure you've documented why and the reasoning for that. It's a good idea to have all of them in case they do become material. And make sure that you've organized those all in one place. And review your process again for new agreements, signature, who signs leases, what happens next. Again, we already kind of talked about that. But we're going to be talking a lot about the lease analysis portion of this, right? So to ensure that you have not only a centralized process for signing and approving leases and determining what type of contract you have, again, we're making the assumption that you've already transitioned to the new lease accounting standard, right? It was years ago. We've got a lot of other webinars that can help you if you have not already. But again, we're making the assumption that you already have, and so that you already have some of these processes in place. But really talking here about lease analysis and extraction, these are some things that you can do to confirm that your inventory is complete, to make sure that at the end of the year, you're not going to find out that you missed some leases that happened back in March. So to confirm you have a complete inventory of leases, you should request a list. Send out surveys to internal stakeholders to identify the contracts that they've signed, new things that may or may not be leases, as well as requesting changes, right? So modifications or amendments. And this may be a variety of different departments, right? Procurement and legal, because they ultimately negotiate and execute leases, but also maybe IT, because they manage technology systems that store lease data, but also may manage things like IT equipment leases or computers, real estate and facilities, since they oversee physical office spaces, warehouse, store locations, retail, supply chain, or really any other department with significant leasing activity. So depending on your company structure, it's a little bit different. So make sure that if there is anything new that they provide, that you add it to your lease listing. Additionally, you want to prepare a list of vendors that are paid to determine whether the payments might relate to a lease that's not already included in your schedule, as well as reviewing the rent expense that you have. And we'll kind of talk about that in our next slide, but review rent expense as well as cash disbursements, again, to determine whether or not there may be some sort of an agreement that slipped through the cracks. And any sort of service contracts to determine whether there's like an embedded lease associated with it. So again, review rent expense, recurring payment schedules, contract listings, service contracts, and request new leases. As for the rent expense, when you believe you have a complete listing of leases, so you still want to review the rent expense and all the rent expense accounts in the GL. There's a couple of ways you can ensure that sort of a sanity check here, that you have leases and lease changes included in your portfolio. So you want to compare and reconcile the physical contracts to the leased asset listings that you obtained, and make sure you have a contract for each leased asset and vice versa. And compare to the maturity analysis within your financial reports to make sure that it reflects at least all of those. And then analyze rent expense. So you can extrapolate your rent expense, your annual rent expense from your final lease listing. So once you've gone through all those steps, you can use the payment information from the contracts to determine what your rent expense should be and reconcile that amount to your actual total annual rent expense from all of the different rent accounts that you might have. And so what you'll come up with is an annual extrapolated rent amount and an actual. if your annual extrapolated amount is larger than your actual rent amount, this might indicate you may not have included all of these changes. Maybe you missed a renegotiation, change, like a termination. You might not be paying the correct amount even. So make sure that your payments align with your modified leases. If your total rent expense is larger than the extrapolated amount, this might indicate that you haven't included all of your leases. There might be some that are still missing. So obviously this isn't an exact science here, right? But again, sort of a sanity check to point you in the right direction either way, if there's a big discrepancy one way or the other. And so again, what my auditors request to ensure that you have all this, the GL balances for your asset and liability, expenses, existing lease list that you have, a sample of all or some of your new leases, so have those available. Anything that was changed, as well as the balance changed in the asset and liability. So, you've got your initial and then your changes in your ending balance. And then those things we discussed, vendor payments, list of vendors and service contracts, and again, documentation that all the leases you do have been appropriately analyzed. Now, if you do find a new lease that was not originally included, again, first make sure you have a copy of the actual contract, the actual lease agreement. And then you would need to go through the data abstraction process. Once you've gone through the process internally of determining that this is actually a lease and it's in scope for ASC 842, these are the different things that you would need to do, whether you have a new lease, renewal, or modification. So you would need to update or add to your amortization schedules. If you have a new lease, you extract the appropriate data, build out your amortization schedules, and then create the monthly entries. If you have a modification that was missed, which we'll kind of talk about that as well, but you abstract the data, update your schedules prospectively, and create your adjusting entries. And if you have a renewal that you might have missed, you need to abstract new data, existing schedules need to be updated, and create adjusting entries. And so you'll need to make sure that all of these things, new leases, modifications, terminations, reassessments, and renewals are appropriately reflected within your balances. And one of the things that you might end up missing throughout the year, which we found is pretty common, is this reassessment here, because modifications and terminations might trigger some sort of internal process, but reassessments may not, because it's just driven by a change in your internal decision making, internal judgment about a lease. So that's something to definitely make sure that you're reviewing if you have not already, to ensure that you're not missing a change in an assumption about an option. But for these things, again, maintain your data abstraction controls, and you need to pull all of these inputs into your spreadsheet or into your software. So, again, focusing on completeness here, tracing the data from the source document to your Excel or your technology, things like what type of lease you have, whether it's a finance lease, an operating lease, make sure if it's a change that it maintained its lease classification, or if it's a new lease that you have the appropriate classification. Sometimes you have a change that's so significant if you have a modification that it changes classifications, which would require, obviously, remove and adjust. And so you need to make sure you have that before then you're pulling out your fixed lease payments, whether that's base rent or additional rent like insurance, or in considering escalations, the appropriate term, start and end date, as well as options, and review your assumption to renew or terminate your reasonable certainty assumptions, and make sure you apply those accordingly. Your discount rate. So while discount rates don't need to be updated on leases that aren't changed, if you do have a change, like a modification, you would need to, or a brand new lease. And other inputs that would impact your asset or liability are lease incentives, things like tenant improvement allowances, as well as the timing which you're going to receive the payout, and any initial direct costs that you may have incurred to get into the lease. Now, here are some things to consider if things don't go exactly to plan and you end up accidentally missing a lease. If you do miss a new lease or a change, you want to consider the timing. So you want to determine if you miss something, do you go back and make the adjustment, or you make it in the current period? Was it material enough to open up that period, or are we comfortable just making the adjustment in the current period? How comfortable are you putting something in the summary of audit adjustments? If you're uncomfortable with this may influence your decision, because sometimes things happen. You miss a lease, you miss a change. As we've discussed, there's a lot of different processes and people that may be involved in this. And so sometimes, most commonly, we see missing new leases, but you'll have a lot of different things that could indicate that you need to do a catch-up adjustment. And so what I'm talking about with a catch-up adjustment is an adjustment in the current period for something that was done incorrectly or missed in the past. And so these are some things that would require a catch-up adjustment: missing a lease entirely, so you don't have it anywhere, you don't have your asset and liability capitalized; a missed modification, so you renegotiated the terms of the lease and you didn't reflect it in your software or in your spreadsheet; a missed termination. I would say this is less common, but if you terminated the lease, got out of it early, and didn't account for that, you've still been amortizing and accounting for it as if you were in it. Any sort of error correction, so you accidentally put the data in your spreadsheet wrong, or you put the data in your software wrong and you realize it 6 months after the lease began. Missed impairment of the right of use asset. Reassessment related event, as we discussed. If you have a change in the facts and conditions internally that change your assumption about a certain option or something like that, and you missed that, or if you incorrectly applied the wrong discount rate, or there were changes internally. If that happens, you need to determine the correct date of change and recalculate as if that change happened in the correct period. Then you'll reverse out what was incorrectly done and rebook that. So that's if it's anything basically but a missed lease. If you missed the lease entirely, you just calculate what should have happened and create a journal entry in the current period to catch you up. And so again, if you're doing this manually, there's a lot of manual processes within spreadsheets to recalculate and get you where you need to be. Software would do this automatically, though, of course. So once this happens, and really just ongoing, regardless of whether you miss a lease or not, you should be reconciling your account balances during the close process. Part of your sort of mid-year cleanup would be to make any of those adjusting entries so you don't end up making them reconciling items at the end of the year. And make those adjusting entries and ensure that you're checking for the following as part of your close process. So whether or not you've got entries posted to the wrong account, errors like transpositional errors, missing information, so you didn't post an entry at all. And again, retain support for these balances and create roll forwards for the changes that impacted your asset and liability throughout that time. So similarly, the auditors are going to request things like the source documents. They're going to ask for the controls and supporting evidence for how you abstracted and appropriately put information into your spreadsheets, proof that it was reviewed, access to your Excel or access to your software, and the ability to test the calculations. So again, be prepared with all of this for your auditors to be requesting it. All right, we are now on our third polling question. So what do you feel is your biggest concern about lease accounting currently? So again, third polling question. Are you concerned about getting it done? Maybe you still haven't complied yet. Are you worried about maintaining ongoing compliance? Is your current solution not sustainable for where you are now? Are you concerned about using the data you have on your leases strategically and effectively, or no concerns, you're feeling confident? So again, this is our third polling question. I'm going to say it again. If you're interested in CPE credit, make sure you answer at least 3 of these 4 polling questions and stay on for 15 minutes. And I will leave this up for a few seconds. and we're going to take a look at the results. All right, thanks again. And we'll move into the next section of our presentation, which is around ASC 842 disclosures and reporting. So it should come as no surprise that with this standard, there are some disclosures that you need to include. And so to make your audit a little bit easier, make sure that you review your disclosure process. Review throughout the year and reconcile your balance sheet accounts, as well as the current footnotes that you have to your financial statements, and be able to provide supporting documentation for your auditors for this disclosure process. So as you all know, there are some qualitative disclosures that you should be familiar with. These are in narrative form. They provide users of financial statements with more information about your leasing practices. And so this is a non-comprehensive list of qualitative information, but you should be familiar with these and be ready to explain general description of your leases that you have, any variable payments that you may have that are not included in your liability calculation, options for like termination options and whether they're part of your balances, as well as residual value guarantees, covenants. And you may have leases that you are aware of that have not commenced yet. Maybe you know, hey, we're going to move into the office. We're going to sign a lease next year. It's going to have a significant lease liability, but it's not actually active yet. Make sure to include that, as that could, again, have significant impact next year. And additionally, as we discussed already, the policies then and judgments that you made, how you guys determine whether something includes a lease, the consideration allocation between non-lease and lease components, and your methodologies. So again, this is just a matter of reviewing, making sure that everything was already included. There's no changes here. And if there were changes, that you've documented them, discussed with your auditors, so that when it's time to put together the disclosure information, that everyone is comfortable with these changes, if there were any in those judgment calls. And as far as quantitative disclosures, reviewing and making sure that these different buckets, that they're all calculated correctly. So you're probably familiar with these already, so we're going to go through them relatively quickly here. But total lease costs includes the sum of your finance leases, amortization, and interest, as well as any operating leases you have, those lease costs. Any short-term leases that were out of scope for ASC 842, the cost associated with them is included in your total lease costs. Variable cost that is not included in your liability, but it still needs to be paid, as well as netted against any sublease income. If you have subleases and you're collecting income on that, that is going to reduce the lease cost. And if you have any sale and leaseback transactions, the gain or loss associated with that. There's also some finance and operating, there's cash information that you need to disclose. So cash that you paid for operating and financing cash flows, supplemental non-lease information, and these two down here on weighted average lease term and discount rate and maturity analysis. Again, this should all be familiar, but you just want to make sure that all of the changes throughout the year are included correctly in not only the qualitative information, but also flowing through to the quantitative information, because some of these are pretty difficult to calculate, as you probably are familiar, having done this within Excel, if you are doing it in Excel, or if you're doing this in spreadsheets. So an example that I provided here is what this might look like when I was talking about like the different buckets. Again, just review this, and if you're responsible for it, make sure that you're rolling it forward correctly and including the changes in this. But you have that total lease cost, which again includes all those items we discussed, those cash flows and those new right-of-use assets throughout the year, what's new, and the weighted average calculations, which again can be pretty complex, both the lease term and discount rate. So you need to have it's split between finance and operating leases for ASC 842. Again, for IFRS, this is sort of all one. And similarly, you will need to disclose a maturity analysis. And so again, I just got a snip here for us of what this might look like, but make sure that you are familiar with these different disclosure requirements. For example, for the maturity analysis, you probably did this last year, you roll it forward, ensure that you've updated your years, you have your supporting calculations, And if you do have operating and finance leases, you split them out because it is required to do so. So again, these are just some examples of what this might look like. And the auditors are going to request that disclosure checklist. So they're going to, you should have a disclosure checklist. Again, I was kind of providing one there, but you should have a disclosure checklist for your year-end disclosures, and they're going to want to go through that. They're also going to want to see what you prepared and how you came up with that, so that they can, perform testing, recalculate. So all the support used that you went through and all the things we've talked about is sort of leading to you having these disclosures. So you want to make sure, again, all those processes are documented throughout. So what does this look like for you? So again, I'm making the assumption everybody on the call today, or most everybody, has already converted to your appropriate accounting standard, whether that's ASC 42 or IFRS 16. But there's probably you're probably using one of two things. You're probably using a software solution, or you're probably using spreadsheets. There may be some of you out there who are doing both. But we've found that, public companies most typically are moving into using software solutions because of all of the controls that it provides. But you may also still be, using spreadsheets. So if you are using spreadsheets, you probably have a sort of a master spreadsheet, if I'm guessing, based on what I've seen other public companies have done. Probably have a master spreadsheet that each tab of it has the amortization schedules for the lease, or the schedule for the lease. Probably got discount rate assumptions, term, all the abstracted details, and you're probably manually updating that. And again, it can be very manual as there's no controls built in. So this requires a lot more documentation, internal controls around using Excel for compliance, because there's not really like a standard way also with using Excel. So it can take a little bit more time for the auditors to be comfortable with those different processes and test your calculations. And you probably got pivot tables and formulas, pulling and pushing data from different sheets, all the way flowing through to the journal entries, and then all the way flowing through to your reports. So again, just be ready to provide support and be organized if you're using spreadsheets, right? Be organized if you know how you're using it. You want to be able to very clearly explain to your auditors how you're using it and ensure that it's up to par with what they're expecting. And there's some reasons why it might be working for you. There's a lot of reasons why public companies and just companies in general use spreadsheets for things. Use Excel. Excel is great because it's readily available. You have full control over how it's configured, the data going in, the data coming out, and it's probably not an additional cost, at least upfront, because you're probably already using it for things. And it's probably working for you if you have a small, simple portfolio. And that's not typically the case we found with public companies, but if you have a small, simple lease portfolio, this might be working for you because you've got a flexibility, it's readily available, you might know how it works, there's not a lot of changes. But there's probably more reasons, especially with public companies on the call today, that you would want to avoid continuing to use spreadsheets if those things were not the case for you, because it's time consuming, as you again probably have a massive spreadsheet with all these different assets in it. And one of the things that people sort of overlook when they're thinking about this evaluation, whether spreadsheets or software makes sense for like your audit, is that using spreadsheets, you basically start out with a blank slate and then maybe you roll forward what you had last year. It requires whoever is responsible for this to have extensive knowledge of ASC 42. And if you have any sort of turnover or you've got new people coming in, there's a lot of training required, not only on the standard, but also how to use the spreadsheet. And while it's my job to be an 842 expert, again, I say this all the time, you probably have other things on your plate other than maintaining extensive knowledge of this accounting standard. And it can be error prone because with a large complex lease portfolio, you're making changes, you're adding things in, there's no internal controls. Anybody could go in there and edit it. You've got to copy and paste the data and then manually check and make sure that you didn't mess up one of the formulas. And it can be complex to create those different like tables that you need and disclosure formats. And it's just not very user friendly and can ultimately lead to audit and reporting difficulties. And so these are some actual quotes that we have from, they're anonymous. So thank you if you're one of the people that submitted these, from people who were using Excel to try to do their audit and reporting. And so this person spent countless man hours in Excel, making those amortization tables and using the data tables to create the liability roll forward. But now they're using FinQuery and they're able to do that very quickly. This person had 60 plus leases and they were using spreadsheets and they were finding it difficult to even compute the present value of the lease payments. Not even just getting to the disclosures, but just calculate that, let alone working through the weighted average disclosures. And then they ended up using, moving to a software, and they found some benefits using our tool, as you can see. And this person over on the right was using Excel, and they found mistakes in their lease disclosures. So again, these are real quotes from people who are using spreadsheets, and it led to audit and reporting difficulties. So as you've probably guessed by now, using a software solution can make you more efficient for your audit. If you have 10 or more leases, we typically recommend at least considering it. Although, not all software is the same. Same thing with you guys. Not all portfolios are the same. But using a software solution will help make your audit go a little bit smoother, as you can grant your auditors access to the system. They can retrieve information directly, eliminate a lot of that back and forth that you probably are doing, because they can just pop in, pull down what they need, pull down the documents, create their own reports to make it easier on them. And everything should be exportable to Excel. So while we don't advise you to use Excel for lease accounting, it does, any software should be able to export data out. And so they're going to need that to save down for their workbooks. And if you're using a software solution, it would provide you an audit trail for changes and, new leases, who changed it, who approved it, what happened on the lease. And if you are using a software solution, we also recommend putting in the document as well, like the source document, whether physical or digital, so that the auditors have access to it as well as you have access to it, so that you're not trying to scramble and find the source of where you put that information in, which again is not something that Excel provides. If you are using a software, make sure, or if you're considering using a software, make sure that the potential vendor has a SOC report, so that the internal controls and the policies and procedures are appropriate, and your auditors are going to want that. So if you do, again, consider using a software solution, they typically have controls built in, which eliminate a lot of that manual stuff that you're doing within your Excel spreadsheets. And so as we sort of end our presentation today, you probably guessed it by now that FinQuery does have a lease accounting software solution that over 700 or 600 public companies are using today. But as I mentioned, we have evolved as a platform for not only leases, but other areas of spend. One of the areas we offer is also prepaid and accruals functionality, which we did not talk about too much today. But we've added on our FinQuery contract management into our software so that not only can you manage leases in our software, but also other contracts, getting you amortization schedules, journal entries, roll forward expense reporting, and being a central repository. So again, these are all features that we have for leases. Now we have those for prepaids and accruals, because we found that a lot of organizations were and are doing their lease accounting in spreadsheets. A lot of them are also doing their prepaid and accrual accounting within spreadsheets as well. So it was something that was highly requested by our client base. So we're super excited about this. If you are interested, we have a product tour available in the chat. Feel free to check it out. But with that, we're going to go ahead and kick off our fourth and final polling question. righty. Thanks everyone for answering our fourth and final polling question of the day. We are excited to announce, if you did not know already, we have also, in addition to these live webinars, self-study CPE webinars. So you can watch topics at your own leisure and earn CPE credits in addition to these live webinars. So if you want to sign up, there's a link, and you can also, I think, click the Paper Clip icon. But in addition to that, we are now approaching the end of our presentation. If you are watching this event live, again, this program is eligible for 1 CPE credit hour. To receive that credit, you must have attended the webinar for a minimum of 50 minutes and answered at least 3 of these 4 polling questions we asked throughout. If you met that criteria, the certificate should now be available for download. And again, we'll be sending you a follow-up email as well. And with that, we want to thank everyone for joining us today. Again, a reminder, if you have any questions about CPE or the webinar today, cpeinfo@finquery.com is going to be the email. If you'd like to, and you're interested in a demo, in addition to answering the question previously saying you're interested, you can also just go ahead and be proactive and click on the link. It's not required for CPE. But at the end of this broadcast, you are going to receive a survey or see a survey pop up on your screen to let us know how we're doing. Please, if there's anything we can improve on or any feedback that you have for future presentations, please let us know. But with that, we're going to go ahead and end our presentation today. Thank you all for joining, and have a great rest of your day.